The hardest part about buying a home in America isn't always the down payment. It's discovering that the playing field was never level to begin with. For millions of Black homebuyers, the real barrier isn't just the price of a house. It's the systems, policies, and silent gatekeepers that decide who gets approved, who gets denied, and who gets left behind. And the numbers don't whisper, they scream. Across the country, the data shows a clear pattern. Black homebuyers are denied mortgages at disproportionately higher rates, charged more for the same loans, and pushed into neighborhoods shaped by decades of housing discrimination, racial inequality, and underinvestment. Even when income, qualifications, and credit scores are nearly identical, the outcomes aren't. And that's not a coincidence. It's a system. But here's the truth that rarely gets talked about. There is no official list of the 10 states where Black homebuyers face the most discrimination. What we do have is decades of research, deep gaps in Black versus white homeownership, higher denial rates for Black applicants, extra costs quietly added to Black and Latino borrowers, investigations exposing bias in appraisals, underwriting, and mortgage products. This video brings all that evidence together to reveal the 10 worst states for Black homebuyers, exposing the patterns most Americans never see, and the real barriers Black communities face when trying to build wealth, stability, and generational security in the United States. But before the countdown begins, understand this: data does not equal destiny. There are powerful fair housing groups, Black real estate professionals, and strong advocates fighting every day to protect buyers, educate families, and challenge discriminatory practices. And you'll also learn what steps every Black homebuyer should take, from getting multiple lender quotes to knowing their rights under the Fair Housing Act, so you can walk into the housing market informed, protected, and prepared. If you're ready to discover where the system is failing the most, why it's happening, and what every Black homebuyer needs to know before signing anything, stay locked in. Hit the like button, subscribe to Virtual Travel by Brian, and watch all the way to the end, because this countdown will change how you see the housing market forever. Number 10. Minnesota. Welcome to Minnesota, land of lakes, cold winters, polite smiles, and the largest Black-white homeownership gap in the entire United States. Yep, you heard that right. The state that brands itself as a progressive paradise is also the state where 76% of white households own their homes, compared to only about 25% of Black households. According to the Urban Institute, that's not just a gap, that's a canyon, a cliff, and a do not enter sign all rolled into one. Now, if you're thinking, wait, Minnesota, the state with friendly people and Scandinavian sweaters? Oh yes, that one. Behind all the niceness lies a housing history that's anything but cute. Decades of racially restrictive covenants, aggressive redlining, and a modern wave of investor takeovers have created a system that makes it incredibly hard for Black families to get their foot in the door, literally, and not just any door, a front door, to their own home. Let's talk about those covenants for a second. Minnesota perfected the art of making entire neighborhoods whites only while pretending it was all just standard procedure. Fast forward to today, and while the covenants are technically illegal, their effects didn't magically evaporate like snow in April. They left behind neighborhoods with huge wealth gaps, limited credit access, and home values that still whisper the old rules even long after the ink dried. Add in modern investors buying up starter homes like they're playing Monopoly with real money, and you get the perfect storm. Black families pushed into the rental market with fewer paths out. Here's the wild part. The gap isn't shrinking, it's widening. In the 21st century, in a state that calls itself one of the most inclusive in the country, you'd think the numbers would be moving in the right direction. But nope. It's like Minnesota looked at the problem and said, we could fix this. Or we could pretend it's not happening and go ice fishing instead. And this isn't just about finance. This is about generational wealth, stability, and access to the basic American dream. When nearly 3 out of 4 white households own homes, but only 1 out of 4 Black households do, you're looking at a structural issue, not a budgeting problem. It's a system where the rules benefit one group while quietly sidelining another. Minnesota may have the branding of a progressive state, but the data exposes a different reality. one where the warmth isn't always extended to everyone, especially when it comes to homeownership. As we move further down this countdown, the pattern only gets clearer, and the numbers get even more uncomfortable. Number 9, Massachusetts. Coming in at number 9, we've got Massachusetts, a state famous for elite universities, historic charm, and apparently one of the toughest mortgage approval climates for Black and Hispanic homebuyers. If Minnesota was the progressive surprise, Massachusetts is the "oh, you thought education fixes everything" plot twist. Let's start with the receipts. According to research from Harvard's Joint Center for Housing Studies, yes, Harvard is calling this out, Black and Hispanic buyers in Massachusetts face mortgage denial rates roughly twice as high as their white counterparts. Twice. As in, you get a mortgage. You get a mortgage. Oh, not you though. For a state with more master's degrees per square mile than Dunkin' Donuts locations, you'd think someone would have figured out how to close the racial gap. But nope, the numbers say otherwise. And when Black buyers do manage to squeeze through the door of approval, it often comes with strings attached. Something like 40% of Black homebuyers in Massachusetts rely on FHA loans, compared to just 9% of white buyers. In case anyone's wondering, FHA loans are the starter pack mortgages with extra fees, stricter rules, and a vibe that says, you can buy this house, but only if it's perfect, freshly sanitized, and comes with no structural surprises. Oh, and did we mention the higher long-term costs? So what does this look like in real life? Picture two families, one white, one Black. Same income, similar credit score. The white family gets approved for a conventional loan with nicer terms. The Black family, more likely to be handed an FHA loan that's basically the discount coupon version of a mortgage. Except the discount is for the lender, not the buyer. Even when Black households finally cross the finish line and buy a home in Massachusetts, they're often left with riskier, more expensive loan products. Higher fees, more hoops, stricter inspection requirements. And guess what? That also makes them more vulnerable to market downturns, job loss, or interest rate changes. In a state where home prices break records annually and the phrase affordable housing is basically folklore, that vulnerability hits hard. And here's the kicker, this isn't happening in silence. Local advocacy groups, housing watchdogs, and even local news outlets like WCVB have highlighted the pattern again and again. But the system keeps chugging along like an old Boston trolley. Slow, outdated, and somehow still allowed to operate. Massachusetts loves to market itself as forward-thinking, inclusive, and opportunity-driven. But look closely at the data, and the message is clear. The housing market isn't offering equal opportunity. It's offering unequal outcomes, dressed in historic brick. Number 8. Connecticut. Number 8 on our list is Connecticut, the state that looks like wealth, smells like wealth, and statistically is wealth. Unless you're a Black homebuyer trying to get a mortgage. Then suddenly, the land of steady habits becomes the land of steady rejections. Connecticut is one of those states that loves to show off its polished suburbs, top-tier schools, and picture-perfect coastal towns. But behind the well-trimmed hedges and colonial-style charm is a deeply documented racial homeownership gap that the state can't keep hidden behind a white picket fence. State agencies and researchers have been sounding the alarm for years. Black homebuyers face persistent lending discrimination, higher interest rates, and more obstacles at every step of the process. And yes, this is happening in a state with one of the highest median household incomes in the entire country. The irony could build a house of its own. Recent reporting from Connecticut Public lays it out clearly. The state struggles with some of the deepest racial gaps in housing and income nationwide. Pair that with heavy residential segregation, neighborhoods divided not just by zip codes but by decades of policy decisions. And you start to see why Black mortgage applicants are being denied at far higher rates than white applicants with similar profiles. Think of it as Connecticut's unofficial welcome sign: great schools, safe suburbs, and unequal opportunity. Please enjoy your stay. And here's the part that really shows how uneven the playing field is. Because of these systemic barriers, Black households in Connecticut are overwhelmingly renters, not owners. Not by choice, but by the sheer math of the housing market. High home prices? Check. High interest rates for Black buyers? Check. Lenders saying, maybe not today? double check. The result is a cycle where Black families are pushed into high-cost rental markets, making it harder to save, harder to build wealth, and harder to escape the exact situation the system created. It gets even more layered when you factor in the state's wealthy reputation. On paper, Connecticut looks like the promised land, but for Black homebuyers, it feels more like the waiting room the state forgot to call them out of. And that wealthy look actually makes things worse. When home prices are sky high and appreciation is booming, being shut out isn't just frustrating, it's financially devastating. In the end, Connecticut is a reminder that wealth doesn't automatically equal fairness. You can have world-class income levels and still have world-class disparities baked into your housing system. And while Connecticut may shine from the outside, the inside story is much darker for Black families trying to plant roots. Number 7. New Jersey. Sliding into number 7, we've got New Jersey, the state where everything is expensive, except apparently the chances of Black families getting equal access to homeownership. If Connecticut was quietly exclusive, New Jersey is loud about it. The numbers don't just whisper inequality, they practically file a noise complaint. Let's start with the cold hard math. In New Jersey, 76.9% of white households own their homes, while only 41% of Black households do. That's a staggering 35.9-point gap. And yes, it's even worse than the national Black-white homeownership divide. When your disparity is beating the national average, that's not an accomplishment. That's a red flag big enough to cover the entire Jersey shore. And the problems don't stop at who owns homes. Oh no, New Jersey offers the full deluxe package of inequality. Sky-high housing costs? Check. Steep property taxes? Double check. Barriers to accessing loans? Absolutely. Reports point to everything from racial disparities in home values to credit scoring gaps, creating a perfect storm where Black homebuyers face not just one obstacle, but an entire obstacle course. It works like this. A Black family applies for a mortgage and already has a harder time getting approved. If they do get the green light, they walk straight into some of the highest real estate prices in the country. And let's not forget those property taxes that feel like an annual subscription fee to live in the state. Meanwhile, white households are more likely to have generational equity, better credit scores, and easier access to traditional financing, which means they can navigate the market with far less turbulence. This is what we call the New Jersey double bind. Denied loans at higher rates, hit with some of the most brutal housing costs in America. You don't need a doctorate in economics to see what that creates, a system where Black families are set up to struggle from the start. And let's not pretend the property tax situation is some small detail. For many families, New Jersey's tax bill is the financial equivalent of a highway toll booth that never ends. Trying to build wealth in that environment? It's like running a marathon while everyone else got to start on a bicycle. And the kicker? New Jersey often markets itself as diverse, inclusive, and opportunity-rich. But diversity only matters if everyone gets the same shot at ownership. And the data shows that Black families are consistently pushed further from that dream. When homeownership becomes this unequal, it doesn't just affect who buys a house, it affects generational wealth, community stability, school access, and the financial future of entire families. Number 6. New York. Coming in at number 6 is New York, the place where dreams are made, unless that dream involves owning a home while Black or Latino. Then suddenly it feels less like a dream, and more like trying to win a Broadway audition without ever being allowed in the building. Let's start with the headline. New York has one of the largest minority white homeownership gaps in the entire country. One major 2025 analysis ranked it number 2 nationwide, with a gap of about 30 percentage points. And honestly, with the way the numbers look, you'd think the housing market took one look at equal opportunity and said, yeah, no thanks. The situation gets even more revealing when you dig into what the New York State Attorney General uncovered. According to their investigations, Black and Latino borrowers are denied mortgages more often. They receive fewer loans relative to their share of the population. And even when approved, they pay more, sometimes a lot more. We're talking hundreds of millions of dollars in extra interest and fees over time. For the same house, the same loan amount. The same credit qualifications. If that doesn't scream systemic bias, nothing will. So what does all this mean in plain English? In New York, a black homebuyer's journey often goes one of two ways. 1, they don't make it to the closing table at all, or 2, they get the keys, but also a more expensive mortgage for no legitimate reason. It's like walking into a store where white customers get the standard price and black and Latino customers get the special price. Except the special comes with a lifetime of higher monthly payments and tens of thousands more in interest. Not exactly the kind of New York special anyone asked for. And let's talk about the housing market itself. New York homes aren't just pricey, they're punishing. From Manhattan with its "you're joking" right prices, to outer boroughs and suburbs where starter homes cost more than some states' mansions, affordability is already a problem. Now imagine stepping into that arena with a higher interest rate, fewer loan options, and a system that's statistically less likely to approve you in the first place. That triple punch, higher denial rates, fewer approved loans, and more expensive financing, makes New York one of the toughest battlegrounds for black homeownership in America. The numbers aren't just unequal, they're financially devastating. New York loves to market itself as a global melting pot, a place where everyone belongs. But the data tells a different story, one where belonging costs more depending on your skin tone. We're halfway through the countdown. If you are enjoying the video so far, hit the like button, subscribe to Virtual Travel by Brian, and ring the notification bell for more informative content. Let's get back into it. Number 5. Ohio. At number 5, we have Ohio, a state that prides itself on being middle America. But when it comes to black homeownership, the middle disappears and the divide becomes crystal clear. If you've ever wondered what discrimination looks like when nobody says it out loud, Ohio offers a case study so obvious it might as well come with a warning label. Let's start with the numbers, because Ohio's numbers aren't shy. Statewide analyses show black Ohioans are denied home loans about 38% of the time, compared to 22% for white applicants. That's not a gap, that's a cliff. And before anyone says, well, maybe it's income differences, let's go ahead and shut that argument down. Other studies, including one highlighted by Axios, found that black applicants are denied nearly twice as often as white applicants, even when income is the same. Translation: this isn't about money. This is about something baked into the system. And what exactly is baked in? Oh, just the usual fun ingredients. Bias in underwriting, credit scoring systems that punish black families more harshly, neighborhood risk models that treat black communities as high risk by default. Basically, it's the financial version of walking into a room and someone already decided no before you said a word. Ohio's mortgage landscape works like this. A black family applies, meets the criteria, checks all the boxes, does everything right, and still gets the "unfortunately, we cannot approve your loan at this time" email. Meanwhile, a white family with the same profile gets a green light and a friendly "congratulations" from the lender. The difference isn't the application, it's the algorithm, the risk model, and the history behind them. And even when black buyers do get approved, Ohio still has traps waiting. They're more likely to be pushed into higher-cost loans, riskier loan products, and mortgage terms that can blow up their budget at the first sign of financial stress. It's like finally getting allowed into the party, only to discover your drink costs twice as much as everyone else's. This matters because Ohio isn't some tiny housing market. It's a major state with big cities like Cleveland, Columbus, and Cincinnati, all of which have well-documented histories of redlining and neighborhood disinvestment. Those patterns didn't magically disappear. They evolved, reappearing in loan approvals, interest rates, and underwriting decisions that consistently disadvantage black families. At the end of the day, Ohio's numbers make one thing painfully clear. This isn't about creditworthiness. It's about a structure designed to keep certain buyers out. And when a system denies black applicants at nearly double the rate, it's no longer subtle. It's math exposing discrimination in real time. Number 4. Tennessee. Number 4 on our list is Tennessee, the state known for country music, hot chicken, and a housing market that hits very different notes depending on your race. If you thought discrimination was subtle elsewhere, Tennessee said, "Hold my sweet tea." A recent national study ranked Tennessee in the top 10 for minority white homeownership gaps, with the disparity hovering around 27 percentage points. And listen, when you're competing for the worst gap, and you're beating out half the country without even trying, it's time to admit the "it's just economics" excuse left the building a long time ago. So what's causing this giant gap? It's not just one thing. It's a tag-team effort of structural disadvantages. Think of it like a recipe for inequality. Lower approval rates for Black buyers, higher cost loans when they are approved, weaker access to generational wealth to use as down payments, and lenders who act allergic to offering equal terms. Mix that together, and Tennessee ends up with a housing market where the outcomes are predictable and predictably unequal. On the ground, the experience often goes something like this. A Black buyer walks into a lender with solid credit and a respectable income. The lender smiles and says, "You're approved," but then quietly adds, "Just not for that loan. We've got a nice FHA product for you instead. Slightly higher fees, more hoops, little pricier long-term." Meanwhile, a white buyer with the same financial profile gets handed a conventional loan with better rates and fewer restrictions, like it's a complimentary biscuit at Cracker Barrel. Or worse, the infamous line, "You don't quite qualify." Not because of income, not because of credit, but because the system is weighted like a rigged carnival game, always tilting away from Black families and pretending it's just policy. This matters because Tennessee's cities, Nashville, Memphis, Knoxville, and Chattanooga, have booming markets where home values are climbing fast. White households are riding that appreciation wave into wealth, while Black families get kept on the sidelines with loan products that cost more and build less equity over time. That's not a small difference. That's a generational fork in the road. And make no mistake, these gaps don't happen by accident. They grow out of underwriting patterns, credit score biases, and decades of neighborhood segregation that still influence risk models today. Tennessee's diversity doesn't automatically translate to equality. The numbers are a reminder that even in states experiencing rapid growth, prosperity is not shared evenly. Number 3. Alabama. Taking the number 3 spot is Alabama, a place where the laws may sound neutral, the policies may look fair, and the brochures may promise opportunity, but the outcomes tell a very different story. If discrimination had a Master of Subtlety award, Alabama would be polishing it as we speak. Let's get to the numbers first. In Alabama, Black homeownership sits at about 51%, while white homeownership is around 77%. That's a 26-point gap. And no, it didn't just fall out of the sky. This is the Deep South, the land where housing discrimination complaints still pile up faster than summer thunderstorms. According to national fair housing data, race remains the #1 basis for discrimination complaints. And guess where a lot of those cases come from? Yep, states like Alabama. What makes Alabama's situation even more infuriating is how polished the discrimination looks on paper. Everything is framed in professional language, wrapped in polite customer service, and stamped with standard procedure. But behind the scenes, Black home buyers are being denied more often, steered away from certain neighborhoods, given lower appraisals, and hit with obstacles in underwriting and insurance that magically don't appear for white buyers. Funny how the risk assessments keep pointing to the same neighborhoods over and over, usually the ones with Black families trying to move up. And underwriting? Alabama lenders can turn that into an Olympic sport. A Black buyer with solid credit might get grilled like they're applying for a top-secret clearance, while a white buyer with similar or even weaker credentials breezes through with a "looks good, when would you like to close?" Appraisals are another adventure. It's not unusual for Black families to watch their home value mysteriously shrink the moment the appraiser steps inside. Remove personal photos, take down cultural decor, hide every sign of who actually lives there. Not because they want to, but because even today, it can mean a higher valuation. Alabama's numbers aren't just numbers, they're reminders of biases that refuse to retire. All this creates a landscape where even when Black buyers manage to qualify, they're navigating a housing market with more hidden traps than a booby-trapped treasure map. The laws say discrimination is illegal, and they're right. The outcomes, however, suggest discrimination didn't get the memo. Despite this, black families in Alabama continue pushing forward, buying homes, building communities, and demanding fair treatment. But the road is steeper, the barriers are heavier, and the system isn't exactly helping them climb. Number 2. Louisiana. Coming in hot at number 2 is Louisiana, a state rich in culture, history, music, and food, and unfortunately, also rich in housing discrimination that refuses to fade into the background. If you thought the Deep South's troubled past was in the past, Louisiana is here to remind you that history has a long memory, especially when it comes to homeownership. Let's start with the numbers, because Louisiana doesn't hide the gap. It displays it like a neon sign. Across the Deep South, black homeownership sits around 49%, compared to 75% for white households. But Louisiana said, "Hold my gumbo," and pushed that gap even further to a 28-point divide. That's not a statistic. That's a flashing alert that something is structurally wrong. And yes, the structure is exactly the problem. Research throughout the region shows that redlining, segregation, and discriminatory lending patterns didn't magically vanish. They just evolved. Modern Louisiana still carries the fingerprints of its past. Neighborhoods shaped by old maps, lending decisions influenced by biased data, and underwriting practices that pretend to be neutral while producing outcomes that are anything but. For black families in Louisiana, the home buying process often feels like running a marathon, where white buyers get a bicycle and a snack break. The hurdles are heavier, the rules stricter, and the expectations higher. It's common for black buyers to be told they need higher credit scores, bigger down payments, or more stable financial profiles. Meanwhile, white buyers with similar and sometimes even weaker profiles stroll into conventional mortgages with better terms, fewer headaches, and lower long-term costs. The difference isn't the buyer, it's the system. And let's talk about FHA loans, because Louisiana hands those out to black buyers like they're souvenir beads at Mardi Gras. Black families are pushed into more expensive FHA products that come with strict inspections, higher fees, and long-term costs that eat into generational wealth. White families, meanwhile, get conventional loans like their standard issue, complete with the lower interest rates and easier paths to equity that come with them. This double standard didn't appear out of thin air. It's rooted in decades of policy decisions that divided communities, underinvested in black neighborhoods, and coded risk models to assume that anything tied to blackness is somehow higher risk. And those patterns persist, quietly, powerfully, and painfully. So even though Louisiana is a state celebrated for its soul, its spirit, and its resilience, the numbers tell a harder truth. When it comes to homeownership, black families are still fighting a battle that white families don't even realize is happening. Number 1, Mississippi. And here we are, number 1, Mississippi. The state that didn't just top the list, it practically ran away with the trophy. If the housing market were a competition in denial rates, Mississippi would be the undisputed heavyweight champion. A 2023 analysis from Hope Policy Institute revealed something staggering. Black mortgage applicants in Mississippi face the highest denial rate in the entire country, roughly 40%. Let that sink in. 4 out of 10 black applicants get denied, a rate more than twice as high as white applicants. This isn't a gap. This is a canyon, a crater, a whole geological formation of inequality. And yes, the Deep South already has a reputation for wide racial disparities, but Mississippi said, everyone else is playing checkers, we're playing chess. Across the region, black homeownership consistently lags behind white homeownership. And in Mississippi specifically, the gap is more than 24 percentage points. That alone is troubling, but Mississippi doesn't stop there. It also leads the country in how aggressively those gaps show up in the mortgage approval process. What does discrimination look like in real life? In Mississippi, it looks like this. A black family earning the same income as a white family walks into the bank. One gets approved, the other gets denied, again and again and again. It shows up as fewer approvals, more denied stamps, more hoops, more requirements, and fewer opportunities to build the kind of generational wealth that homeownership creates. This isn't about creditworthiness, and it's definitely not about income. The data shows that even when black applicants present the same financial profiles as their white counterparts, the outcomes are dramatically different. It's not the paperwork that's changing, it's the patterns of the system, built over generations and still dictating who gets to own a home today. In a state where homeownership is one of the few realistic paths to economic mobility, these denial rates don't just hurt individuals, they widen the racial wealth gap year after year. Mississippi's housing market isn't just unequal, it's actively reinforcing inequality with every loan approval or denial. And that's what makes Mississippi number one. Not just because the numbers are bad, but because they're consistently, overwhelmingly, and systematically bad in ways that ripple through entire communities. Mississippi isn't where the housing crisis for Black Americans begins, but it's where the crisis is exposed the clearest, where the silence is loudest, and where the numbers tell a story the country can't keep ignoring. And that wraps up our countdown of the 10 states where Black homebuyers face the most discrimination. If you're still watching, you now understand why these disparities matter and why the fight for equal housing access is far from over. Make sure to like, comment, and subscribe for more powerful breakdowns that shine a light on the truth and protect our communities.